Okay, gang, we are now on the board and we're getting ready to rock and roll with some proper journalization into the journal and post into the ledger. And of course, we're going to use that fabulous system that I created for you guys called the all clear system so that we could properly come to the right answers. So without any further ado, let's get to transaction number 1. Where first, It's a Joke received $20,000 cash from investors in exchange for common stock. So we already know the ropes, gang. First things first, you always identify the keywords. So what keywords do we have in here? Receive cash and common stock, right? And so we already know what to do once we identify those keywords, gang. We're gonna decide what type of accounts are affected. Obviously, cash is affected, right? And we know that cash happens to be an asset. Well, if cash is an asset, cash is in the all gang. What about the other account that's affected? Easy, right, gang? The keywords guides us to everything. So look at the keyword common stock. Obviously, that is the account that has been affected. We receive cash by issuing common stock. And common stock happens to be a part of stockholders' equity. Stockholders' equity also belongs in the clear gang, under capital, right? So now that we've identified the accounts that are affected and what gangs they belong in, our next step is to understand how were they affected. So based on those keywords, again, we keep going back to the money gang. Receive. So if we receive cash, obviously cash, which is an asset, has done what? Gone up. Cash has increased in the business. So how do we increase cash? Easy. Cash is an asset. It's already in the all gang. And based on the all clear system, it tells us that we're going to debit cash. What about common stock? Well, common stock is a part of stockholders' equity, but how was it affected? Common stock has increased. Why? Because clearly we've issued more shares outstanding. So we have more shares to shareholders, which means our common shares has went up. How do you increase common stock? Since it's a part of the clear gang, anytime you have to increase an account within the clear gang, you're gonna credit it. So that's it, gang. Then we go to proper journalization. So we're gonna always debit first. So we're gonna debit our cash for $20,000. And we're going to credit common stock. Remember to write indent like you're starting a paragraph anytime you want to credit something. And bags on bags, we are done. Our debits equal our credits, and we have debited cash for $20,000, and we have credited common stock for $20,000 as well. This is proper journal entry, gang. So after this, we should apply the posting to the T accounts in the ledger. We create a cash account, and we debit cash for $20,000, and we create a common stock account and credit cash for $20,000. Transaction number 2. It's a Joke received $4,000 cash from customers for services performed. As always, we're going to identify those keywords first, gang, and our keywords are received cash and services performed. So based on those keywords, they're gonna let us know what accounts are affected. And so obviously cash is affected because of that's the key word. And obviously services performed is our true definition of how we earn revenues. We provide a service or sell a product. So now that we know those accounts that's affected, our next step would be how are they affected? Okay, so we have cash that we receive. So obviously the cash in the company has gone up. Cash has increased in the company. What about our service revenues? We performed a service, so we've earned more revenues. Therefore, our revenues has increased as well. So now that we know how they were affected, we should know how to properly record them into the journal. And that's when the all clear system comes in. So cash happens to be a part of what gang? The all gang. And since cash increased, all clear system is gonna tell us to debit cash. Bags all day. So we're gonna debit cash for $4,000. Now, what about that service revenue? We already know it increased. Now we need to know how. Well, what gain does service revenue belong in? Service revenue belongs in the clear gain, right? And we know how to increase anything in the clear gain, right? It tells us to increase it by a credit. So we're going to credit service revenue for $4,000. And in terms of posting, from our previous illustration, we have a service revenue of $4,000 that was credited. So we need to credit that. And if I'm not mistaken, right, we had issued some common stock for 20 earlier, which increased our cash from the transaction number 1. But from this particular transaction number 2, we also need to do what? Debit cash for $4,000. And so now we just finished journalizing in the journal and posting the accounts in the ledger. Transaction number 3, January 5th, paid $200 cash for office supplies. Again, gang, we know what to do. We always focus on those keywords. Keywords is obviously paid, and we know at this level, anytime we pay, cash is going down. Now, hold that thought, and I'm going to come back to that because I want to add something to that tip. Obviously, the other keyword was cash and office supplies. Now, back to this paid. We knew from a previous lecture that anytime you saw the word paid and a company paid, that means cash is going down. Well, we're going to add to that tip. Okay, gang? Anytime we know we see the word paid, cash is going down. We already know cash is an asset, and we already know cash belongs in the all gain. And so we know any time that you decrease something out of the all gain, you have to credit it. So this is what I want y'all to burn into that noggin. Anytime that you see the word paid and a company is paid, you're gonna always credit cash. Always credit cash. So we halfway there, gang. We already know from that one key word, paid, it's time to credit cash. So what do we have to debit? Well, based on logic, right? The only other account that was affected was office supplies. But let's follow through. Office supplies is also an asset. And what is it doing in the company? Going up. Since it's an asset, it's in the all gain. And how do we increase things in the all gain? We debit it. You see how easy it gets, gang? So we're going to debit supplies for $200. And we're going to credit cash. Why? Because we already saw the keyword paid. And so when it comes to posting into our ledger, we will now post that $200 into cash on the credit side, and we will find our supplies account, which happens to be an asset that went up, and we're going to debit that for $200, right? Bags on bags on bags on bags. Transaction number 4. January 9th, perform services for a customer and billed the customer for services rendered $5,000. So we already know what to do, gang. Keywords: perform services and build, running out of ink, build customers, $5,000. Now, based on those keywords, what accounts are affected? Perform services obviously means that revenues were affected. Anytime we provide a service or sell a product, we are earning revenues. We billed a customer. We provided a service and billed a customer. So basically, we set up an account to collect in the future, which happens to be accounts receivable. So our revenues accounts has been affected as well as our accounts receivables. How were they affected, gang? Anytime you generate revenues, your revenues are going up in the business. Therefore, the revenues has increased. We provided a service and billed a customer, so now we expect to collect cash in the future more. So our accounts receivable has increased as well. Accounts receivable happens to be an asset, and since it happens to be an asset, it's in the all gain. Revenues obviously is in the clear gain. So we said the revenues went up, and since it's in the clear gain, we're going to credit revenues. And we said accounts receivable is in the all gain because it's an asset and it went up as well. Therefore, we are going to debit accounts receivable. So accounts receivable is a long word, but we getting familiar with stuff. So I'm about to shorthand these account titles. So this was for $5,000. And we are going to credit service revenue for $5,000 as well. Bags on bags on bags. Now that we've journalized into the journal, we have to post into the ledger. So set up our account receivable into the ledger. And we know that our accounts receivable was debited, so we're going to debit $5,000. And we already have our service revenue account, so we're going to simply just credit $5,000 for the service revenue. Piece of cake. Transaction number 5. January 10th, received a $300 utilities invoice in 2 weeks. So now it's getting a little tricky, right, gang? So what are the key words? Let's see. Utilities invoice, I guess, in 2 weeks, right? So what accounts are affected? So basically we received a utilities bill, right? And we know that utilities is an expense to the company. So we received this particular bill, which means that utilities expense has been affected. Now, because it's due in 2 weeks, we haven't paid for it yet, which means we owe on this utilities invoice. And since we owe, that means we also have a payable, a liability that has been created, right? So we have utilities expense, and I'm going to go ahead and call it utilities payable. 2 accounts. Now, how were they affected? Obviously, utilities expense is going up, and our liability, because we still owe on it, utilities payable has gone up as well. So how are we going to record it? Well, based on the all clear system, we know where utilities expenses belong. Utilities expenses are in the all gain. And so since it went up, we have to debit it, right? What about the liability utilities payable? That's easy too, right, gang? Utilities payable is a liability, which means it's in the clear gain. Utilities payable has also went up, which means based on the system, we're going to credit it. So we're going to go ahead and debit utilities expense for $300. And we're going to credit utilities payable for $300 as well. And so after we journalize into the journal, we're going to post into our ledger. And so we have to find our utilities expense, in which we're going to debit $300, and a utilities payable, in which we're going to credit $300. Transaction number 6, January 19, paid for advertising in a local paper of $250. This is cinch, right, gang? Keywords paid, advertising. We already know, gang, when we see the word paid, we know cash is going down. And since cash is a part of the all gain, we always credit cash. You see the word paid and the company is paid for something, credit cash. So what other account was affected? Keyword, advertising. We already know advertising is an expense to the company. So advertising expenses has gone up. We have more advertising expenses now than we did of this transaction. Therefore, our advertising expenses has increased. And since advertising expense is a part of the all gain and it's increasing, we're gonna absolutely what? Debit advertising expense. So we debit advertising expense and we credit cash. Credit cash. Almost want to do a little dance because I feel you guys learning right now. you know? So, that's it for that one, gang. Got a little too excited, started dancing, and we forgot to post to the ledger. So, advertising expense, well, we don't have one, so we're gonna go ahead and create one under here. And we're gonna debit advertising expense for $250, and cash we are going to credit. Now we're done. Transaction number 7. January 25th, collected cash in full from customer billed on January 9th. So, what are the keywords in here, gang? Collected cash from customer billed. So basically what happened was we collected on an account we set up previously. And so what accounts are affected when we collect on an account? Clearly, cash is affected. Since we collected cash, it went up. And what account did we establish previously? Well, we set up an account in the future to collect cash. If we ever set up our account in the future to collect cash, we consider that to be an accounts receivable. So our accounts receivable is now affected because we received the cash. Now, how is accounts receivable affected, gang, if we just finished receiving the cash that we set up previously to do in the future? That account receivable must go down. So, both cash and accounts receivable are assets, and they're in that all game. So, cash is coming into the business, cash is going up, so therefore we're going to debit cash. And since we collected on an account receivable, that account receivable must go down, which means we're going to credit it. So, we debit cash for $5,000, and we credit accounts receivable for $5,000. And when it's time to post, we go into our ledger and we make sure to debit the $5,000 on the debit side for cash. And then we find our accounts receivable T account, and we're gonna credit now $5,000. Easy breezy, gang. The final transaction. January 31st, paid cash dividend of $4,000. So, pretty simple, gang. We should be getting familiar with these keywords, right? Paid, dividends, right? Anytime we see paid and a company paid, we always credit cash. So we halfway there, okay? The other keyword obviously is dividends, right? And so dividends has increased in the company because more dividends have happened or been given before this transaction. So our dividends went up. We already know cash is an asset and cash is in the all gain. So what about dividends? Dividends we know is in the all gain as well. Why? Because dividends is considered a withdrawal from income to the shareholders. So both of those accounts have been affected in the all gain. And since cash is going down because of the keyword paid, we know we're crediting cash. Dividends is going up, which is going to make us debit it. So we're going to debit dividends for $4,000. And we're going to credit cash for $4,000. And then we're going to post into the T account for the ledger. And so our cash must be credited correctly for $4,000. And our dividends, where are we going to put dividends, gang? Let's put dividends right here. Our dividends will be debited for $4,000. This pretty much summarizes our process of recording, particularly journalizing into the journal and posting into the ledger. Now, I've provided you an awesome system that I humbly beg you guys to use because it'll really help you out from understanding the fundamentals of accounting. And so if you apply that system to your journal transaction analysis and your recordings, then your reportings will be a cinch. As always, gang, I appreciate the time that you all share, and I hope that you all are learning things and how to chase this bag with accounting. And if you are, don't forget to like, subscribe to the channel, or send a notification to your friends so that they can enjoy this information as well. Thank you. See you soon.